Any other perspective?
I think for us it's just, reminding yourself, and it's, it's one-on-one, but reminding yourself about the discipline, as Darius talked about. We look at somewhere in the range of 1,000 opportunities in a year that will actually cross our table, whether it's something we proactively reached out to or will come into us. We'll go physically meet 300 to 400 of those with the aim of maybe doing 3 to 4 deals a year. And so it's a painful funnel, very, very wide, and ending up with something. And frankly, of the 3 or 4 that we hope to do, we've actually done 1 to 2 in a year. Has been our experience. So it's frustrating. It's a very time and process-intensive business investing in India. You're running around constantly, and there is often the itch to just do a deal, maybe for the sake of getting a deal done because you see an exciting guy sitting across the table. But just the discipline of, again, making sure it's the right kind of entrepreneur and at a decent valuation, and there'll be 1 of those a year, and that's okay. But just sitting and waiting. I think that's been our big takeaway.
Okay. And then looking at, I guess, the world a little bit more glass half full and looking into the future, how do you see the industry evolving over the next 10 years? Vish, why don't we start with you?
Sure. So I think over the next 10 years, future is pretty bright. I think the next 3 or 4 years will continue to be challenging, but over the long term, even if you look at a 7-8% growth rate on a $1.5 trillion economy, the country needs excess of 10 to $30 billion ballpark of equity investments, assuming 2 to 1 debt to equity ratios. So there's going to be need for capital. There are large sectors actually that need the capital, like infrastructure, which haven't really fulfilled their full potential. Back in 2007, 2008, there was a huge excitement around the infrastructure sector. There were a lot of funds that were going to set up $1, $2, $3, $4, $5 billion India-focused infrastructure funds because the scale of the opportunity is actually massive, and you could have $10 billion invested just in infrastructure alone. I think there were issues with corporate governance. There have been certain other regulatory issues in areas like roads, in areas like airports, in railways. A lot of areas where capital can go, and large funds can write $100 to $500 billion checks in this sector. I think that issue over time will get fixed. I think that sector will eventually attract capital, and that will cause some pretty exciting times ahead. Number 2, I think there are already many more buyout kind of transactions, many more funds taking a build versus just a buy and sit on the sideline approach. We are in our own thought process and strategy are focusing on slightly younger companies, finding the seeds of a good business, but trying to then build it ourselves and drive that and getting our hands dirty. It's much easier to have a portfolio of 7 to 8, 10 growth equity companies where you sit on the board but not necessarily take an active role. But we're seeing many more companies now that are open to having a buyout type of transaction done, or even younger companies that are being funded by VCs and driven by private equity guys. So we'll see much more hands-on investing that will happen over the next few years. And then finally, I think the capital markets will open up. There will be exits. We've all been waiting for a lot of some of these exits to happen. And once good exits happen, like it happened for Make My Trip, once some of these funds get a 5x, 10x, 20x, ICICI Ventures got a 20x on VA Tech. There are a whole bunch of good exits that happen. There is that automatic euphoria that comes about, and there will be strong positive sort of trends that will pan out over the next 5 to 7 years.
Darius?
I think the next quantum jump in the PE industry, like we saw earlier, where we were roughly a 1 billion a year industry, and now we're at, on average over the last 5 years, at 10 billion. Now to take it from a 10 billion to, let's say, a 20 billion per year kind of industry, the key thing that has to happen over the next few years is there has to be an adequate demonstration of exits happening. Once that happens, I think once again that will trigger a level of interest in the Indian private equity market, and we'll see a surge in additional capital coming in. Now that's easier said than done. The IPO window has been shut for a better part of, has been shut for more than it's been open in the last few years. In fact, a statistic that I found very interesting, that is over the last 3 years, corporate India has actually raised more equity capital from private equity than from the IPO markets. This has never happened earlier. It's actually happened right now. But so certainly when the IPO window opens up, and hopefully for a more sustainable time frame, we'll see more exits. But that alone won't be enough. I think we're also going to have to see a lot more strategic exits in the vein that we saw, the fabulous Piramal Healthcare exit to Abbott Labs, or the Paras healthcare strategic sales. As we see more of those, I think that is really going to be the critical next catalytic event for the industry. And I think really, I'm hopeful that in the next maybe 2 to 5 years, we're going to see more of that.
Naveen?
Yeah, I totally agree. I think exits are key. I think the other shift we're starting to already see is, we've had a real there's been a deluge of capital that's gone into some very asset-intensive industries, and I think we're seeing the graduation into more IP-intensive industries, and a whole generation of younger, interesting companies that are now growing into our size, that are coming from that bent, and that's really exciting. And I think that what I talked about earlier with the depth of management point, we're starting to also see people realize the value of great professional managers, and we're also starting to see companies really invest in that area. So we're excited about what we're seeing next. In fact, we have one of our star professional managers here in the audience and be on one of the next panels. And I think the ability to come and influence those kinds of changes, is starting to become apparent to people. So we're excited about what's coming up.
Okay.
Yeah. So next 10 years, well, the best person to quote is Mark Twain. It's always difficult to make a prediction, especially about the future. So what do I say? Okay, so let's take the worst case scenario from the macro perspective. India, will it continue to grow at a rate where it will be attractive for foreign capital to continue to come in and invest and make returns? Now, what kind of returns India can give? I mean, if you look at India's savings rate, it's pretty much 23-24% household savings rate is a 30-year data that's not going to budge. 5-6%, another 5-6% from corporates. So that's a total of 30%. Government is a dissaver. So let's say 24% and an incremental capital output ratio of 4. So about 6% in real terms, another 6% of inflation. So 12% nominal growth rate, which means economy is going to double every 6 years in rupee terms. Not necessarily for dollars, but yeah, for rupee terms, yes. Which means at least there's going to be a lot of money going around in the system, and certain kind of businesses which can capture this growth in money supply in India would continue to be attractive, and private equity would be definitely benefited, because again, as I said, look for business models and look for cash flows, and those businesses which have cash flows would certainly be benefiting from this money supply in India. So I am very positive.
Thank you. I can't resist giving you my perspective, so apologies for that upfront. My perspective, our perspective as a firm is that the next 10 years for private equity in India, I think, are going to be amongst the best 10 years that we will have seen. Our deal flow right now is phenomenal. And when we started the office in India 5 years ago, and we told people, listen, we're focused on large checks, $100 million plus, etc., they fell about themselves laughing, saying, market doesn't exist, there's no deals, where you're going to do this, you'll end up doing pipes, etc. The reality is that what we're finding is that a focus on buyouts, a focus on large deals, and a focus on our sectors has produced a couple of deals in the portfolio and a pipeline of 8 or 10 deals right now in the pipeline, which are about 30% of the deals we're looking at globally. So it is a huge mind share within our firm. The quality of deals is very good, and it's not due to any genius on our part, to be honest, but we're at a very interesting time, I feel, in the evolution of the Indian economy, in that an entrepreneurial company that was started about 20-25 years ago, around the time that the Indian economy was opening up, and which has grown with the kind of growth that Akhil just described, by now is of scale. It's about $100 million top line, about 20 or so, $25 million EBITDA. And it's in the scale of a $200 to $300 million buyout if an entrepreneur was open to buyouts. And it also turns out, again by a stroke of luck, that a lot of those entrepreneurs who've grown these businesses in lots of sectors are now having to address the question of generational transition. Whether the next generation actually wants to run those companies in their family, whether indeed they want, like Bharat described earlier, a transition to professional management, or whether they want to actually do something totally different. And in some of those cases, the conversation that we're having is often, we'll start a conversation around, let's look at a $25 to $50 million growth equity investment, and a lot of persuasion, a lot of pushing, and finally you say, well, we can actually buy this company out. We'll give you a good exit. It'll be at a fair value, and we have enough in our armory in terms of growing value. So whether it is applying deeper management bench or operating skills, or developing distribution or branding or systems, processes, IT, which tend to be underinvested in entrepreneur-led companies, especially first generation. So, that opportunity, I think, is pretty unique. It feels to us like the US, like private equity in the US in the late 70s, early 80s. And if you go back to those vintages, that's when the industry really got established in this country. So we are very, very excited about private equity in India, some of the mistakes notwithstanding. But that's my plug.